بسم الله الرحمن الرحيم والصلاة والسلام على رسول الكريم. Assalamu alaikum and welcome to Takaful online course. And today's topic is a continuation of the discussions that we have started on the differences between Takaful and insurance. And we are at the difference or the point number 7. Point number 7, it's about the investments. When it comes to the investments, the insurance basically invest its funds, do investments end-to-end based on their selected investment classes, but they don't have a concern whether the investment classes are basically Sharia compliance or otherwise. In other words, they may invest in bonds, they may invest in a conventional stock, they may invest in a conventional ETFs, and so on and so forth. So basically, there is no kind of restrictions for their mandate of investment unless the mandate which is related to the rating, return, risk, and some other criteria which are very common in the investment. Now, when it comes to the Takaful, the investment is very restricted, whereby the Takaful operator invests its fund in Sharia compliance instruments only, meaning that they don't invest in treasuries of big corporations or governments. They don't invest in bonds. They don't invest in the conventional money market instruments. They don't invest in the conventional stock or conventional ETFs or a conventional Forex and so on and so forth. But they will put their money in a different investment asset classes. It is somehow equivalent to the conventionals, but they're on the other side. It means that they are Sharia compliance, meaning they may invest in sukuk, which is like it is an Islamic bonds. They may invest in the Sharia compliance stock. Like for example, if you look at Malaysia is I think close to 70% of the stock market is Sharia compliance. So they have a very big space to invest their money in 70% of the stock market of Malaysia, which is a Sharia compliance. They can invest in Sharia compliance ETFs. We have some ETF Sharia compliance. They can invest in some REITs. There are some Sharia compliance REITs in Malaysia, in Singapore, and other places. They can invest in Sharia compliance stock which have been vetted through or declared or listed as Sharia compliance by the different index provider or Sharia compliance index providers, like for example the Security Commission of Malaysia, FTSE, Dow Jones, Yasser Capital, and other index provider, as long that stock is listed in the recognized Sharia compliance stock index provider, so the financial institution can invest in those stocks, whether locally or internationally. Also, they can invest in the money market instruments which are Sharia compliant. They can invest in like a fixed deposit at the Islamic financial institution, because it is based on Tawarruk, which is a Sharia compliance instruments, and so on and so forth. So they have to distribute their basically business portfolio according to the return or risk and some criteria of rating, especially when it comes to sukuk, but within the Sharia compliance stock. Of course, this one could be different from one jurisdiction to another jurisdiction, from one country to another country, from one institution to another institution, and this is depending how advanced is the country, how robust is the investment infrastructures, how advanced are the financial market in those countries, and how much Sharia compliance investment classes are available in each country. So you may go to venture capital, you may go to private equity, and so on and so forth. You can go even to some startup company, you can go to a fintech company. So the space is open, but of course we recognize the challenges and the issues in some country whereby they don't have very robust, very diverse, very advanced, very comprehensive financial or Islamic financial market, whereby you have different asset classes, whereby you have the options, a liberty to choose based on your diversify selected portfolio. But here it goes back to the guidance and advice of the Sharia board and the kind of interactions between the Takaful operator and the Sharia board, how to go about the investment in order to maintain those funds in a proper condition and generate a decent return for the financial institutions. But here in Malaysia, I think the market is so diverse and the investment classes are available whereby the financial institutions can choose from a different selected investment classes for their investment. So again, going back to the maybe going to the same point whereby insurance, basically they have the liberty to invest without kind of recognitions of the Sharia investment classes, but whereby the Takaful operators are under the obligations, under the mandate to basically invest their investment funds in Islamic Sharia compliance investment instrument. And as a result of that, the profit generated, the wealth accumulated as a result of that kind of Sharia compliance investment is regarded as a permissible income, a permissible return, and permissible wealth accumulations for the financial institution as well for the policyholders. The second point that creates differences between the Takaful and insurance is basically the Sharia board, the Sharia and the Sharia board provisions. In conventional insurance law and regulations, there is no such provisions that require the insurance company to comply with Sharia or to establish the Sharia board as a part of the Sharia governance structure. Whereby, of course, in some countries, not all, it depends how, again, advance your law and regulations, but in some countries, like for example Malaysia, there is a provisions in the Act, which is the Islamic Financial Services Act 2013, short we call it IFSA 2013. There is a provisions that Sharia is a part of the requirements for the business model or for the Sharia compliance of the Takaful operator. And also there is a provisions of the establishments of the Sharia board or the Sharia committee as part of the Sharia governance structure. The other difference, which is the difference number 9, the Sharia board functions. In the conventional insurance, there is no Sharia board functions, so there is no Sharia board which could be part of the governance structure of the insurance. They have the board of directors, they have the managements, but they don't have an independent Sharia board that they may refer to. But when it comes to Takaful operator, it is part and parcel of the structure of the Takaful operator business model. It is part of the Sharia governance structure. We have the board of directors, we have the management, and we have the Sharia board, which is in Malaysia 5 and in according to IOF standard requirements 3, whereby this collective group of Sharia scholars will perform the functions of advisory and provide consultancy and guidance to the financial institution to ensure that the business and operations are according to the Sharia rules and principle. And if there is any kind of doubtness, any kind of concern, so they may refer to the Sharia board to provide kind of guidance and resolutions to ensure that business operations are according to the Sharia rules and principle. And as a result of that, the financial institution or the Takaful operator will maintain its license to operate as a Sharia compliance institutions and also maintain its profit and return as a legitimate profit, and also maintain the status of the Sharia compliance product offer in the market. This is some of the differences that have been covered in today's sessions, and we will carry on, inshallah, the remaining differences in the coming sessions. With that, thank you very much, and assalamu alaikum wa rahmatullahi ta'ala wa barakatuh.